Hi guys, this is John Lowe from the 2018 30K Challenge. I wanted to do a trade review on my Tesla trade yesterday on 4/16/18. Here are the disclaimers. You can read that. Anyway, bottom line for today is that I'm up 28% on my small account. Started off today around $1,500. Ending the day close to $1,900 or something like that. Okay. The setup I used to give credit to David Modell. You can go to this website here, and what you'll find is he gave a video on this open gap strategy right here, morning gap strategy, day trade opening gaps. And I listened to this a couple times and I said, okay, I am going to put this in my memory bank. Anything that, gaps up or down 40% or less than 40% has an 80 or 90% chance of retracing back to the close of the day before. So anyway, taking notes of David Modell's video, these are the notes that I have. You can copy them and look at them if you want for yourself. But like I said, 80-90% of all gaps less than 40% fill 80 to 90% of the time, and any gaps above that actually fill about approximately 50% of the time. So, yeah, so we were actually a little bit above 40%, and so I really only had a 50% chance of this working out, but Tesla just shot straight up from there. So we'll take a look at that in a second. And before we get back to the closing thoughts, let's go to the chart and I'll show you what I'm doing here. Now there's a bunch of lines here. You have to go back to some of my other videos if you want to know where all these lines come from. This is the day before. This is a 30-minute chart. This is the high of day. This is the low of day. Should be a red to green line. And what the red to green line represents is where the stock closed yesterday, which is right here above there. So it's, yeah, right about, actually should be right about there, okay? Anyway, let me erase that. So it's right at 300. So the pre-market action before I went to bed, this is where it was at. The pre-market low was here, pre-market high. When I woke up this morning, I noticed that this is gap down in the morning overnight. So this is actually down here, and I said, something, this might be close to 40%. Let me take a look at it. So I have a Fibonacci retracement tool I use. I switched it up so I can just make a couple real clicks. Click on the high, low, click on the high, and then I click on, actually, did I do that right? No, actually going down. So we're going down, I click on the high, click on the low, and then I go back to the red to green line. Now, if you see this, the 40% line is right here, and here's the price action. So we're really close. And so right away, I'm saying, okay, hey, if I'm gonna use this open gap strategy, and what this statistically happens, we know that this is gonna close. If it opens here above below 40%, it's gonna close 80 to 90% to this red to green line. If it opens below the 40, it has a 50% chance. So a 50-50 chance of closing this or not. Okay, so anyway. So let's switch to a 5-minute chart. So actually, before we do that, so my trade thought is I want to get long somewhere around here and go straight up to 300 and take my profit. So we're looking at 295.08. So let's say we get in at 295.50. So we're going to risk 50 cents. So anything below 295, we're probably going to get stopped out. anything above, and then if it goes up to $3, we're going $300. We're going to take our profit. So basically, let's switch over to a 1 minute chart, and obviously you'll see that it didn't go all the way up eventually. And so I had a chance, pretty early on as it shot up to get, I was thinking about getting along and I hesitated because I wasn't sure if it was going to go up and then flush down. Anyway, just shot up out of my range in the first couple of minutes. And so I ignored it for a bit. I said, hey, there's no way I can take this trade right here. There's no way. Even above here, I can't take this trade because I can't, there's a good chance it's going to consolidate back down here before we find support and go back up. And don't, it could go up more, but there's too much risk going down. And as people got in here, they're going to take profit, which is going to drive it back down. So anyway, I waited. I took my eye off of it. I missed this entry down here. I end up getting long around here. So this is actually a lot further away from where I wanted. And so I think I was still going to use this as my stop. This would have been a $200 loss if it gets below here. I got long around here. And in fact, let's see where we got long here. Here's the Tesla trade. I got long at the price of 236 at 6:41 a.m. 6:41, which would have been right here. So as this thing started shooting up, I got long here. Probably got a bad fill. And then it went down. I was losing some money through here, but it was just chopping through here. I was hoping that once it broke through here, that we'd really find support at VWAP, and it looks like we really did here. And then it just eventually went up. It went up, came back down, almost retested this high, which it did, came back down. I was anticipating, the retest here, but I knew if it couldn't break through this VWAP, it was going to shoot up. And, sure enough, it did on the 2 minute chart. It shot up, retested twice, found support. And, actually on this one right here, if you look on the 5 minute chart, it found support with the 9 EMA on this one right here. So, and then from that point, it just went all up to, near 300. I think on this one right here, it was getting close, came back, and then what I did, the option price was about 30 cents apart between the bid and the ask. And the ask was at 345. And so, I had a feeling we're going to get a quick push up to 300. So I sent out orders to sell at 350, all 5 contracts, even though the bid was at $3.10. So this is what you can do, because on a quick push up, you can get filled on it, and that's exactly what happened here. So at 7:07 is when I got filled. And since we'll look at that, this is 7:07, 7:08, and then right there, that's when I got filled. So, man, this was a really easy trade because, always an easy trade, but this is an easy recognizable trade because we know it could be a huge level at 300. We use the open gap strategy to look for the trade long, which is what we did. We used risk management. Could have got a much better fill. I would have really loved to have got filled down here. This would have been a little bit scary coming down to get long here because I could have got, it could just continue to flush down and not work out for me. But as it came back up here, got long right here. and it ended up working out okay. Well, it actually worked out great. So from here to here is about a $570 win here on a $1,500 account. So that did really well. Um, and really, what I should have done, I was so happy about this, but I didn't mentally stay focused. What I should have done was I should have bought puts on this double top here, and and my stop would have been maybe above 350 or something like that. Because ultimately, what ended up happening is that Netflix went down 10 points for the rest of the day. Now, if I made 28% on this, and if I would have bought here, how much more of a how much more of a bigger move that was? That easily could have been over 100% on my account in one day, easily. But oh well, that's the way it goes. I made a great trade here. I hit 28%. Totally happy with that. Totally missed this part. That's okay. That's what trading's all about. And just let you know that there is tons of opportunity every day in the market to make you know uh, easy 10, 15, 20%. And in this case, I made 28% on my total account. If you saw what I risked, I was risking about 200, made about 570. So if you want to look at that, that's almost a 300% return on what I wanted to risk. Anyway, that's about it. Closing thoughts. You have to watch the pre-market charts to see which stocks are moving. Understand which setups are best for you. Use your risk management. Know where you're going to get out of the trade. Know where you're to have your target for the trade. And for Tesla, the target was 300. Have a stop loss for your trade. We know is below the 40% mark. And then send out a limit order for your profit target, and sort of at the high. So when it pushes up really quick, you don't have to sell at the bid. You can actually sell very close to the ask and get closed out. Anyway, let's see. If you want to open up a Tastyworks account, it'd be appreciated if you use my link there so I can get credit. If you want to learn how to day trade, there's a great guy by the name of Ed Martin at theaveragejoetrader.com. And he is a day trader, and he's a great mentor and teacher. He takes brand new traders and shows them how to day trade. And then if you like swing trading, Taylor Horton is a great swing trader. He trades the ETFs and sector analysis, and he does really great. So check these guys out. Hope you enjoyed the trade review. Sorry I went a little bit long, and we'll talk to you later. Bye-bye.